Hello friends, welcome back to this quick update on the market condition. We have these measured moves. This is a chart of ES. Let's look at the vibrations again. We had in the prior video discussed where market is going, so I kept it here just to make sure. Way back in September we were here and we had this measured move, doubling factor, and it reacted to those doubling factors, and we put this on, as you can see where market is, how far it is stretching. It stretched, came back, and we put it here. Market stretched and came back, and you knew these levels in advance, months in advance, so there's no saying you don't know about it. You knew it, and you call your brokers and you call your financial advisors to participate in this reactions. And on the other side we have other impulses also, and you can see, let's see, this is a bigger one. This is a bigger one, right? So this impulse was going as well as you can see, but we have gone through this many times, how to create those impulses. Just to revisit, these are the value lines for the banks, big institutions, and we have 160 and 200 moving average on that, and we are just looking at that, how far are you going from the value. That's all this, how far are you going from value, right? That's all there is. Alright, so watch the videos on ES, SPX. We have done it many times. We are tracking this ES for 2 years now, right? It is going back. So where the levels are, now we are here. So if this impulse has accomplished its goal, as you can see, if it goes down from here, or a doubling effect, we already know where market is going. You got it? Alright. So it's not you're surprised, you're not surprised, you know it. You should be hedging it, and you should be doing some tactical moves, and there are logical reasons comes later. Okay, and we just track it, all right. What else is going on? Well, instead of spending time, let's just hit to the pad 369forecast.com x.com 369 forecast. Here we are saying, if you look at this oscillations of Q and the measurements we have, let's see if I can. So you can see here this oscillation is not done yet on the Q, so it may pull down at these levels, market maker levels. So be cautious about these levels right here. Q might have more ways to go. Now we are just doing measurements on how the value works in the market. Remember, you're watching these videos, you agree that you take care of all the laws required, SEC, FINRA, FACTA, CTA, every law produced ever since the inception of market, and next 1,000 years you will be following those laws. So if you are interested in these levels, you can always contact your professional advisor to get you engaged if you want to. If you are a self-directed investor, you make self-directed analysis, right? We are just showing that there is a law, an order, and value, and then this value is where the tradings of various instruments take place, right? So this is just a Q. Okay, what else we have here? Now remember, this is Q, and it could be here very fast, right? It could be here very fast. All right. Okay, so this is, I think, SPY, but if you look at this, SPY has gone down quite a bit. Now, if you look in history of this oscillator, these are great pullbacks. There's also gap here, you can see market gapped up, they did not fill the gap here. Now they have opportunity to retest this gap area, so it could go down further, you can see here, It can go down anywhere it wants, it can go anywhere it wants, right? Because remember, we are dealing with probability space. We are not dealing with deterministic variables, but probabilistic variables, which means if I ask you the question between 0 and 1, what is the amount of values you can fetch? Well, if probability space between 0 and 1, there are almost infinite combinations, like 0.001, 0.1, 0.111, 0.122, right? There can be hundreds and millions of, so there are millions of values you can have between 0 and 1, and that is where we are dealing with probabilities. We are not dealing with deterministic value where 1 plus 1 is always 2. So based on the probabilities and based on the ecosystem probabilities, right? Remember, the government has much more power than they override things. The billions can come and go. So this is the first strike with market maker. If gap filling, all these things, give this gap, that gap, they may do this. But what we track is where the big money flows are going to come. If they don't come, remember, they go to the next level. With 80% accuracy, they stop at the first level. If they don't, for example, if there's a government shutdown, they may bring it here, right? Remember, they have to rally now. Next 3-4 years, they have to rally. So they don't want to rally from here. They want to rally from somewhere lower. Remember that. They may bounce from here and bring it down next leg, A, B, C, D, right? So all technical analysis, your brokers are masters of that, right? They have series license, so just work with them. But be cautious about how the natural laws and their levels are moving at this moment. Going back to the bigger picture, see, remember this green line, this is pressure line, right? The pressure, when it moves to the top side or the bottom side, we take the snaps. So if you watch it again, market went up. I'm looking for longs only. So how do I do longs only when the pressure is high? Let this, when the green pressure is high, we look for pullbacks into this balance zones or lower. So these are all the buys. And this yellow line is market value, multi-day market value right here. Pull back to the value, pull back to the value, value, and then we hit our measurement move. Okay, so let's see if that impulse, this is upward impulses, right? We also have downward impulses, how much they're impulsing. So for this action to react on the other side, we can do a couple of things. We can put it here where it broke, right, and watch it, or we can just keep on tracking. So normally we have to keep where it broke, keep it here, so we know at least the minimum target. So they may be getting here. This is ES, this is 5816, and this is what we are saying, 5186. Sorry, 5816, right? 5816. See this same thing. So the measured move and market maker moves on SPY, they are aligning, and this is also a gap. So just be cautious about that, nothing more. So what else can we share at this moment in time? Second part we can share is we can duplicate it, right? If they really take on the steam, here's the second part of it going here. See that? All right, just keep an eye on it. I will save it. So I just take this out, I save it. Now you have these levels. See how market is reacting. If you want to participate in this level or not. I'll just keep this in zones. Remember, we're dealing with probabilities, right? Long-term investing, your financial advisors. So now why people trade and they make their own self-directed investments. They also like to participate in the market and just try their luck, right? So we don't deal with luck, we deal with probabilities. We want to make decisions at certain levels, and pullback is healthy for the market, right? They may be gunning it here. Now measured moves are here. They may be gunning it here, here. So we have to have some tactical strategy where we can say these are great levels for us to buy, right? Anyway, going back to the pressure. Pressure is down. First time pressure went down. Pullback, short here, short here. The pressure is still down aggressively, just like here it came down, pullback, boom. Alright, so there's going to be a lot of changes in the economical structures. There's going to be a macro level changes coming, so be cautious, stay hedged. Thank you so much.